Good morning, traders, and welcome to Phoenix Blues Morning Update. Hope you're all very well this morning. My name is Nishal Patel. I'm going to be conducting this morning's update and give you a brief synopsis of what's happened on the market overnight and what we'll probably expect to continue or reverse over the course of this European opening session. First things first, just before we look at any charts, just have a quick look at what data or announcements we have today, or key areas of concern for many of us traders. We have the usual unemployment claims coming out just after midday on the greenback. Unemployment claims, as I said, are a common feature on a Thursday, and that should give us a little movement on the USD. We'll have a look at the US, the dollar index in a brief moment. Another key point, as you can see, is later on, just after that, is we have Yellen speaking. Again, I think the market's going to be looking to see how hawkish she could potentially be, especially off the back of last week's rate hike. That being said, last week the Fed were a lot more dovish than expected, despite the fact that the dot plot did show that we were potentially looking at two further hikes for the course of this year. I think the markets want a little more certainty on the rate hikes, and also potential of more than the two outlined from the dot plot. Remember, that's not in stone, even though there is the dot plot just gives us an indication of how members have effectively voted and how they see the balancing act for potential fiscal monetary policy together to regulate the economy and most importantly the effects of global economic policy on with the US. So we know that's a big talking point, and no doubt all of our Pod Trade members are discussing this in a lot of depth and applying it into the markets accordingly. But let's go straight into the charts. I think the first chart we'll have a good look at will be the dollar index. As we can see on the dollar index, just going to bring this cursor out right now, we've come off and rebounded or rebuffed off this low, which is just below the 100 mark, showing up as 99.3, give or take a point or two, 99.28. Still hasn't taken out the previous low that we've seen here on this daily time frame. Remember, you should also see that on the weekly time frame, which is quite important. Now, obviously, if it was to take up that low, then we would most certainly see a buying on some particular currency pairs and a sell-off if we haven't, and that's what we're going to have a look at now. So we've seen the dollar bounce back somewhat, but let's not forget this is the weakest it's been since the tail end of January 2017. Since then, it did rebound off that. So it's the greenback is relatively weak and has only been down here once this year. Okay, so let's remember that in the back of our heads, considering the fact it hasn't boosted up. Moving straight on to the euro, we see the euro has literally clipped the top, or just missed, I would say, the 200 day moving average on this daily time frame. Right now floating at 1.0785, just coming off the inside of that 200 day moving average, having broken through this long-term trend line that's been drawn on this weekly time frame, as we can see off its highs. Literally come off the trend line, tested just below it, found the resistance, broken straight through support, and then again finding some resistance at that 200 day. Now, the relevance to the dollar index for us is obviously if the dollar index were to break that 99.30 mark, or I would say the previous low that we'd seen back towards 27th, 28th, 29th of Jan. I'll just get that exact number out for us here. It was 99.14, 99.13 roughly. If it were to break that, then we would have seen the buy up and the continuation of the momentum, the bullish momentum on the euro, potentially looking to target the higher area of the 1.09s, potentially 1.1s. Excuse me. But it looks as if we probably see a continuation of the sell-off on the euro. It has been extremely rocky this week. I want to say extremely in comparison to last week, because obviously last week we were full of central bank announcements coming thick and fast through the week, as well as a lot of key data. I'm sure many traders are relieved that this week is a lot lighter in terms of data and announcements coming out. So there is the potential there for trading. Again, moving on, the yen is doing the same. We're having a look at the yen on this weekly time frame. As we can see, we've clearly made lower lows and lower highs on this weekly time frame. So over the course of the tail end of 2016, so that was the last time the yen was up at the 118s, and then breaking down through past the 115 mark, which was quite important because we had a retest of that area, as we can see on our chart, around 115.50, and then has hammered down since, taken out its previous lows, where we've almost had an area of consolidation, and you probably see that would be a lot more visible on the daily time frame here. So we've seen this range being broken, or the low of this range being broken, and almost price actions coming up after bouncing off that 200-day moving average, coming up and literally just trying to test it, missed it, or I could say it's tested it. If we take these lows that we've seen back again in the tail end of January, start of February, we tested it, and sitting right now at 111.18. We saw a break of we saw a break into the 110s yesterday. It's something that we've outlined previously, for especially for the protege members at Phoenix Blue. They would be aware of which areas we're going to be targeting prior to us taking a reversal trade. And as I said, probably looking to see this momentum continue. That we may see some rebuff off that, because we haven't seen that dollar index broken yet, so that's something to pay attention to. Cable on the flip side of things, after again, just like the euro, we've seen underlying strength in cable. That has stuttered somewhat, no doubt. No doubt with the terrorist attack right next to our offices, in fact, in Westminster. We saw a little stutter on the markets and a blip. Obviously, the uncertainty there was there at the point, because there was uncertainty of how severe the act of terrorism was. But right now, cable still holding its ground, floating just below 1.25. Right now, 24.90s. High 24.90s right now, as we can see on this daily time frame, and still holding its ground again, having broken through this trend line that we've seen very similar to the euro, and tested it, but at a very key level, in fact, and we probably would be looking to expect some kind of retracement very soon. Moving on forward, before we just move over to the commodities, I'm just going to flick over to Australian dollar, which is doing really well, especially off this daily time frame here. We've seen it pull back aggressively. Many traders have been shorting this, and most certainly I have on this particular account. I've got a position on which is doing really well, considering the fact the size of the position, of the stop, to be precise. So it's doing really well. Looking at a 2-to-1 already as it stands. Potentially looking for more. We have looked to trade off its highs already, but I'm just going to scale in onto this time frame, and you should be able to see where the entry point and the stop loss is. So doing very well on 2-to-1. This morning did offer some intraday opportunities, especially if you come and have a look on a slightly smaller time frame. And what you should have seen is you should have seen it top out around the 70 mark this morning, as we can see highlighted by these two these two highs here, in and around the 70 mark, as I said, which would have given a storming trade for first thing this morning. Just having a little breather right now and cycling back up. Excuse me, guys. Sorry, little course this morning. Probably looking for price action to get in and around the 60s before it potentially comes tumbling back down again, which would be very nice for many of the traders out there. Moving on forward, having a look at the commodities. Oil has bounced again off its lows. We've seen it break through 50 on previous weeks. 52 and then 50, breaking down into the 48s, and came down yesterday and hit a low of 47 prior to it coming back up and coming into this region again where it looks quite comfortable around the 48.30s right now, floating at 48.32 on WTI per barrel. Looking very, very bearish as we presumed last week, potentially looking for the upside and for it to swing back up again. But with OPEC, the way it stands, and the news that's coming out, well, OPEC's still looking for production cuts, which I'm sure many of you know, but that has really hasn't transpired into reducing the amount of stockpiles that we have globally. In particular, a good gauge of that would be the number one consumer of petroleum products in the world, which is the USA, and their stockpiles, as we've been seeing, have been large week in, week out for well over 2 months now. So, and again, we did have stockpiles fairly high yesterday, but had a slight pullback off that, but because of the extent of the stockpiles and the fact that OPEC haven't had large petroleum producing or crude producing states follow them in terms of production cuts. One big, I think the biggest name that keeps on coming to light would be Russia. We haven't seen the price of oil bound up past the 52 and back into the mid 50s again. So, you know, it still looks fairly bearish on this side, stabilizing somewhat, but definitely a chart worth watching. And the final chart we're going to have a quick look at right now is gold spot. Just have a look at gold spot right now. On this daily time frame, we can see gold right now is floating at $1,247.55 per troy ounce, breaking up to the 150 mark, which was a key level, and literally has bounded straight back down off that 50 mark. You can see that high of yesterday's bar was just about 152 to be precise, 152.05 on this daily time frame. Probably get a little more precision if we scale down the time frame and also see how it materialized on this 4-hourly time frame. So if we just go back, go back towards late yesterday evening for us, we saw it break up into the 50s and 51.24. There you go. There's an exact price for yourself of this particular broker that's showing the high, and literally didn't hang about there at all. Just missing my daily R1 on the pivot point, broken down to my pivot point effectively this morning. Very early hours this morning, and pushing on again. Probably again looked to trade this definitely in the next day or potentially even today. Okay, guys, so that's this morning's morning update. Hope you all have a cracking day on the markets. Until next time, guys, happy trading. Goodbye.